Every hour you work, a small piece of your paycheck quietly disappears. Not because of taxes, not because of bills, and not because someone hacked your bank account. It disappears while your money is sitting exactly where you've been told to keep it, the bank. Millions of Americans believe they're doing the responsible thing. They're saving, they're budgeting, they're planning for the future. Yet somehow, that future keeps getting more expensive. So here's the question. If saving money is the key to building wealth, why does it feel harder than ever to get ahead? By the end of this video, you'll understand why the financial advice that helped previous generations no longer works the same way today, how inflation quietly transfers wealth without most people noticing, and why the richest people rarely allow large amounts of cash to sit idle. Because this isn't just a story about money. It's a story about a system, one that rewards some people while slowly leaving others behind. Once you see how it works, you'll never look at your savings account the same way again. For decades, the formula seemed simple. Go to school, get a good job, work hard, save money, retire comfortably. It sounded almost guaranteed. And for millions of families, it actually worked. A single income could buy a home, raise children, pay for college, and still leave enough to save for retirement. Parents passed that advice to their children. Teachers repeated it. Banks encouraged it. The entire financial system reinforced one message. Saving money is how you build wealth. But then something strange happened. People started saving, yet they felt poorer. Their bank balances grew, but homes became unreachable. Groceries became more expensive. Healthcare costs exploded. College tuition climbed year after year. The numbers inside their accounts were getting bigger, but what those numbers could actually buy was getting smaller. And almost nobody could explain why. Was it greed? Bad government policies? Corporate profits? Or was something much bigger happening beneath the surface? Something hidden in the way money itself works? To answer that, we need to go back to one decision that quietly changed the financial future of almost every American, and almost no one noticed it happening. Why saving money no longer works. There was no national emergency, no breaking news, no headline warning Americans that the value of their money was quietly changing. It happened so slowly. Most people never noticed. Let's say you buried $100 in your backyard in 1980. 40 years later, the bill would look exactly the same. Still crisp, still worth $100. But try buying what that same bill could buy back then. You can't. Not even close. The money didn't change. Its buying power did. That's inflation. And despite what many people believe, inflation isn't just higher prices. It's lower purchasing power. Every time prices rise faster than your income, you become poorer. Even if your paycheck gets bigger. Even if your savings account grows. Because wealth isn't measured by the number of dollars you own. It's measured by what those dollars can actually buy. And that's where the real problem begins. Because inflation isn't completely random. Someone always benefits first. Imagine an entire stadium receiving free concert tickets, but one small group gets in an hour before everyone else. They buy the best food, the best merchandise, the best seats. Then, the gates open. Thousands rush inside. Prices jump. Lines get longer. And suddenly, everyone else pays more for the exact same experience. Money works in a surprisingly similar way. When new money enters the economy, it doesn't arrive in everyone's pocket at the same time. It moves through the financial system in waves. Large banks, major corporations, governments, financial markets, and only later, workers, consumers, small businesses. By the time new money reaches the average household, prices have often already begun to rise. The result? The people closest to the source spend yesterday's dollars. Everyone else pays tomorrow's prices. And once you see this pattern, a much bigger question appears. If simply holding cash causes it to lose purchasing power over time, then how do the wealthiest people protect and even grow their fortunes while inflation keeps rising? The answer isn't found in a savings account. It's found in what they choose to own. Why saving money no longer.
Here's something that surprises most people. The wealthiest families in America don't spend their lives collecting cash. They collect assets. Think about it. When was the last time you heard a billionaire brag about the size of their savings account? You probably haven't, because cash is where money waits. Assets are where money grows. When inflation pushes prices higher, many businesses simply charge more. Land often becomes more valuable. Real estate prices can rise. Shares in successful companies may increase over time as those companies earn more revenue. While the average person watches prices climb, asset owners often watch their net worth climb too. Suddenly, the financial system looks very different. One group is trying to save money. The other is trying to own the things that money flows into. And over decades, that difference becomes enormous. But if the strategy is so obvious, why doesn't everyone do it? The answer has very little to do with intelligence, and almost everything to do with survival. Imagine two people earning the exact same salary. The first spends every paycheck just keeping up. Rent, groceries, insurance, car payments, credit cards. By the end of the month, almost nothing is left.